Hey folks, welcome back. If you recently moved out of New York or you're thinking about it, this one's for you. New York State is aggressive about something called residency audits. They want to make sure that if you're claiming you don't live here anymore, you actually don't. And if they think you're still a resident, believe me, they're coming for the taxes. So let's talk about how this works. New York has some of the highest state income taxes in the country. So when high earners move to Florida or Texas or another no income tax state, New York loses revenue. That's why they audit, and they do it a lot. The Department of Taxation and Finance, or DTF, has an entire unit dedicated to residency audits. They're looking at people who changed their address but might still have ties to New York, and they're looking to prove you never really left. So who's most likely to get audited? Well, for one, high earners. So if you're making significant income and you suddenly stop filing New York returns, that's a red flag. And if you make over $500,000, that's not a set stone amount. They're going to come after you. People who move to no income tax states, such as Florida is a big one, Texas is another one, the state knows this is a common move for tax purposes, so they scrutinize it heavily. People with ongoing ties to New York, if you still own a home here, if you have kids are still in school here, if your doctors and dentists are here, if your country club membership is here, all of that matters. New York uses two tests to determine residency. The first is called the domicile test. It's asking, where's your permanent home? Where do you intend to return to? This is about intent and where your life is centered. The second test is known as a statutory residency test. So did you maintain a permanent place of abode in New York and spend more than 183 days here? If the answer is yes, you are a statutory resident, even if you're domiciled elsewhere. And you can fail either test and end up owing New York taxes on all your income. So it's one or the other, it's not both. If you're audited, documentation is everything. Keep records of where you are, cell phone records, credit card statements, EasyPass records, flight itineraries. The state will use these against you, so you need to maintain good records and be able to use them in your defense. Because believe me, they're going to look into all of that. Cut your ties to New York. Sell the apartment, move your doctors, change your voter registration, update your driver's license. The cleaner the break, the stronger your case. And if you're keeping a place in New York, be very careful about how many days you spend here. Track it religiously. So if you moved out of New York, or you're planning to, and you want to make sure you're doing it right, we can help. Just give us a call. Happy to answer any questions and help you establish a defense if we need to. If you're already being audited, do not try to handle it alone. These audits are detailed, they're invasive, and the stakes are very high. And on top of that, they last forever. They last a year or longer in most cases. As always, work with a tax professional who knows New York residency rules inside and out. Every situation is different. You want to make sure your mood holds up if the state comes asking questions. See you in the next one, everyone.